Ladies and gentlemen, welcome to Wealth Down with me, your portfolio manager, Norbert PM. And in today's episode, we're going to talk about the best stocks to buy in October. I'm going to give you my top pick for the month of October. Now, yesterday we had a major red day in the market with most of the indices being down, excepting from a few sectors. But first, let's take a look at the market vitals. We had no major economic events excepting one from China, consumer confidence. It came in at 36.9 instead of 70, instead of 37.1, which is worse than expected, but only slightly worse than expected. Then coming up in the week ahead, we still have tomorrow balance of trade in Australia and the ISM PMI report in the US, which will be extremely important. Then on Friday, we're going to have the non-farm payrolls and the unemployment rate. Now, looking back on yesterday, we had the S&P closing in a major red with minus 0.93%, with only the energy sector WTI crude oil being up in one day 3.5%. Amazing. And we're going to talk about why this just happened yesterday. Now the Nasdaq closed up also, which is a major drop from the Nasdaq, and the Dow Jones barely closed up in the negative with minus 31%. In the futures markets, the S&P is still in the red, pointing upwards, wanting to open up in the green. We're going to see how this will unfold until the bell. Now on commodities side, we have oil still getting gains. We have gold trying to go back in the green, silver in the green, copper in the green. In the futures market on Forex, we have everything in the green, and also crypto with Bitcoin and Ethereum in the green today. Now yesterday we had earnings from Nike. Now the Nike stock dropped after its earnings, almost 5% in after hours on Tuesday evening after the company reported a fiscal first quarter revenue that missed estimate and withdrew its outlook for the year aimed at the CEO transition. Now Nike CFO Matthew Friend said this, and I quote, "A comeback at this scale takes time, and while there are some early wins, we have yet to turn the corner." Now, we sold Nike before their earnings, long before their earnings when they had their huge pop, and we're not going to invest in Nike in the foreseeable future. But if everything changes, of course, if you are a Substack paid subscriber, you're going to know it first. If you're not, then you're going to find it out on the weekend edition where we go through our portfolio, through what we bought and what we sold. But for today, we have no major companies reporting earnings. So let's move on for today's subject. What is our topic for the month of October? Now, if you had only one shot left in your barrel, what would you shoot at? With everything being mostly in the red, and some sectors might seem valuable, where is the real value hidden? Where is Momo? So let's find Momo by looking at what is green. So first things first, we can see the energy sector. Now, energy has two major aspects or two principles why it could be green. First of all, economic growth. Economic growth means a lot of energy consumption because we're producing. That's why we're growing. High GDP means that we're producing. Is this the case? No. Now there's a second reason, and that is sadly war. And Iran yesterday just fired 180 ballistic missiles at Israel, and this would be the biggest attack considered since the April barrage, when Iran fired 110 ballistic missiles at Israel and 30 cruise missiles in response to the target killing of one of its generals. I would be cautious investing here in energy due to the fact that the tensions could escalate or could de-escalate. So, where is Momo? Let's find Momo. Still, there's not where Momo lives, but maybe it's in Meta. Meta being one of those stocks that I have been looking for an entire year. It was in Meta that I sold down on Meta, but let's just take a look at Meta's financials. So Meta had a couple of great quarters. It has a growing revenue with only a slight decline in the last quarter. It was growing from quarter one. So after the Q4 2022 lows, it grew to 2.64%, 11%, 23%. And also, let's just take a look at net income. Actually, that is important. So income was, how profitable is the company? Income was 163%, 201%, 116%, 72%. Now, don't get me wrong, Meta is a great company with also with its price target now at $576. And the market was telling us yesterday that Meta is one of the winners. That's why it was green. Everything else was red. Is one of the winners with its price target at $576 and a P/E ratio of 29.50. May seem a bit high, but the P/E ratio does suggest that the investors are optimistic on Meta's future's potential. But the technicals, let's take a look at the technicals. The technicals do suggest that, first of all, RSI 76 yesterday. This is overbought, ladies and gentlemen. We might see a pretty large pullback down to the 100 moving average or even further, but somewhere there is maybe a better opportunity to jump into Meta. Although the market would disagree for the moment, but if everybody bought, who is left to buy? So, still, where is Momo? Maybe it is in the next preferred child of the market from yesterday, which was Alphabet's Google. But this is also a stock I have been watching for a while, because just take a look at its financials. Again, a exceptional growth year to year and actually quarter to quarter, with incomes being somewhere with 14 for the second quarter of 2023, 14%, 41%, 51%, 57%, 28%. But the second quarter here for June is where everybody kind of lagged in their earnings. Now, all of this is due to AI. Now, let's just take a look at its P/E ratio of 24.16, which is slightly above the typical market average, but which is around 15 to 20. But don't forget, this is a technology company. And with AI bungling in the barrel there, the P/E ratio generally reflects growth for the company. Now, the historic value of Google, so the historic P/E ratio is somewhere between 20 and 30. So a P/E ratio of 24.16 would suggest it's actually fair value. That is price of $167. So maybe this is why the market keeps buying on Google. Google is also one of the companies that didn't really click with AI. And I might suggest that as soon as this is going to click for Google, remember, Google is the search engine of the internet. It also owns YouTube, which is the search engine for all videos. So it could be that we found Momo. It could be. Now at $167 for Alphabet stock may not be considered a cheap stock in the traditional sense, but given the above market PE of 24.16, it could be considered a fair value. So with this being said, ladies and gentlemen, thank you so much for watching. Please don't forget to share, like, and subscribe. Have a lovely day. My name is Norbert BM. Catch you next time. Bye-bye.